Hello and welcome to another update video about ADA. The ADA chart is still potentially in this triangle here. We discussed that in the last video and I explained to you that potentially this E-wave low is in because we have a complete triangle highlighted here in gray with A, B, C, D, E, and after the E-wave is complete, oftentimes we see a break to the upside. However, we need to see that break. We need to see the 40-cent level break because it could also be that this triangle breaks to the downside, of course, right? There are two ways of counting this, but what the analysis allowed us to understand was that we should be watching because technically in the more direct bullish wave count, the triangle was complete, and that always means, okay, you know, there's no guarantee we break to the upside, but it's certainly the likelihood is there. If it happens, it should happen from here. And I think it was down here, we looked at it at around 36 cents. And yeah, I explained to you, if we get another break below that E-wave low, then we are likely in the a C-wave to the downside. If we break above 40 cents, then we are likely already in the fifth wave to the upside. So the idea is, first of all, the primary scenario is that we are in a wave 4 correction that should lead to another high in wave 5. So the yellow count is the base case at the moment, okay? This is already a pretty detailed wave count because we're already looking here at the microstructure within a larger diagonal pattern, which would be here part of a, well, in the diagonal, we are basically in the third wave. That's the base case. Within the third wave, because it's a diagonal, we're tracking an ABC structure in the third wave, and this here could be the A wave, which might get another high, and after the A wave we should see a B wave and then the C wave to the upside to complete the wave 3. Then we should see a wave 4 and a wave 5. That's at least the base case we're tracking. Below 26.4 cents something more bearish is going on. We have to revise the wave count. Maybe new bear market lows will be coming then, but that is, we're not even close to 26 cents. So let's not focus on something that is not an immediate risk. It will get a risk below 26.5 cents that we actually will go to new bear market lows. But again, we're not even close to that support level. So the idea was then within the yellow count, there are two ways of how this fourth wave can play out and the subsequent fifth wave. So in the fourth wave, we said, okay, a fourth wave can always unfold as a triangle. That was the first wave count here, this triangle pattern, which would be tested first. Wave 4 as triangle in gray, basically as alternative subdivision within wave, or as one of the subdivisions within wave 4. And after 5 waves, such a triangle is often complete. So we can count it A, B, C, D, E. There are some requirements, like, for example, lower highs and higher lows, which we've seen, but it would now need to give us further indications that we actually are in this fifth wave through a breakout above 40 cents, followed with a break above 41. Basically, a break above the D wave high will be a first indication that wave 5 is running. A break above the B wave high will be a confirmation because then the triangle is really officially broken. However, such a triangle, yeah, it's nice to say, okay, maybe wave 4 unfolds as triangle. And again, if it does, then we know which levels to watch for. However, a triangle can also break the other way. And because the wave 4 can also unfold as a simple ABC structure, this B wave could be a triangle, which might have topped here with the latest high. And then it should now break down and give us evidence for that. If we break below the E-wave low at pretty much 35.5 cents, then we are getting a C-wave down lower into the orange support area before then wave 5 starts. So ultimately, it's not so important to know how exactly is it going to play out because only the market will decide. There are two potentials. There's one base case, which is bullish, short term at least, short term. In previous videos, we talked about the overall risk on this chart still, that it still exists. But yeah, as long as we're holding basically 26.5 cents, the focus can be on higher. There are two support areas. First of all, the orange one would be tested. If that fails, the yellow one. But yeah, there is, we have to give it a little bit of space. okay, especially in a diagonal pattern. But overall, yeah, not much change. So I'm basically watching if the 40 and 45 cent, so 40 and 41 cent levels are breaking. And if they break, then we can also look for a potential target for this fifth wave. Yeah, and we can do that by taking the length of waves 1 and 3 together. Then we go to the low of the fourth wave, which might be the end of the triangle. And then we're talking about a target range between 43 and 48.5 cents. That's the ideal target range. If it wants to extend, 53 cents. Okay, that's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure you follow us on Instagram and Twitter. You can find the links in the video description. Thanks a lot for watching. Bye-bye.